Hey, Steve Zelnardo here with Remax Experts, Zelnardo Associates. Happy Monday morning. Quick update on the market. Current inventory 19,084 units, down from 500 from last week. 718 sold, so it's still pretty much status quo. Remember, I'm saying we're going into the Christmas season here, and we're going down in inventory, even though we're at triple the inventory we normally go into. But it is doing what it's supposed to do. Go into a lack of inventory, and then January we're going to get a dump of inventory. This is what we're telling clients right now. Get to market, lower inventory, still some buyers out there in the market. You're going to have a better opportunity. January comes, you're going to have a big inventory dump. It's going to cause more issues for you to sell your property, a lot more competition. Prices are going to drop further. Remember, we're not in an increasing market. I know there's some sort of optimism about next year. People think it's going to be great. I'm not sure. I'm going to read you an article why I don't think so, and then also TD Economists don't think so either. So if you need to unload a property, get it on the market now. We're going into December. Get it on. Inventory is dropping. We sold one of my personal investments a couple weeks ago, and again, amazing. We're going to come out whole. We're not making profit on it. We made profit off the back end of it, but we're taking out our initial capital invested with the initial down payments and also the renovation costs. So we're taking our initial capital out. We will invest that somewhere else. We won't touch Canada until policy changes. Obviously, currently right now we're going to be going into an election year. I believe it's next year. Supposedly, historically the economy should start boosting up. The current administration, normally any if it's left or right, they'll start boosting the economy going into an election. People have short-term memory, not remembering this current pain that we're facing right now, and then they vote for the same party. So we won't put any of this initial capital back into Canada until there's some sort of policy change and there's some sort of light at the end of the tunnel. Currently, right now, we're just very frightful of the rest of the 5 years, let's call it. Let's see, we have one more year with this administration, and then if there's another four or whatever, like this continual governance of the Liberal Party, which we're not interested in investing in. With that said, we were going to talk about absorption rate. We always look at the inventory based on current markets. And then the article that I'm going to read next tells us a little bit about this and why the TD economists are worried about 2024. So let's look at the absorption rate. So the absorption rate is basically the amount of inventory on the market and how long it's going to take to sell the current inventory in the market if not one other listing gets to market. So currently right now we do micro view of it. So Kleinberg, we're at 6.88 months, so almost 7 months of inventory in Kleinberg right now. We were at 6.2, then 6.5, now we're at 6.8. So then I did a little bit of, I pulled back into a macro, kind of look at all of Vaughan in general, so that'll include all of Vaughan. So that's like Thornhill all the way up to Woodbridge, and then obviously just basically all of Vaughan. So we are currently 3.5 months of inventory if not one other listing hits the market currently right now, which is not horrible. 3 months is like they usually say 3 months is like a balanced market, so now we're going out of balance. This is why we're still having sales going on, and we're still seeing some properties trend and move. And to be honest, like we're you go to market with a property, we're seeing like we went on a listing appointment last week, was it last week? Yeah, we listed an appointment last week, and then we were looking at a particular area in Woodbridge, like Major Mac and West End, those townhouses there. A lot like bidding wars are working there. They list them at $999. They sell them from 112, 1,250, 1,150. Obviously, these were like at 1.4, 1.5 at the time. But ultimately, if you can get it on the market, it's listed for $999. Sell it for like 1.2. I mean, that's pretty much market value of that property in today's pricing, or value rather. And you kind of get cashed out and real quick, basically like a 7-day sale, maybe hopefully a 30-day close. You get your money out. This is why we're obviously telling clients get the market now. Get cashed out. My closing for my duplex now is going to be in January. To be honest, it can't come soon enough. I just want that cleaned up. I feel like the market's going to keep diving down. It is what it is. And people say, why? Why do you think that? It's not even government policy at this point. It's just the holding power of the general public. And now, like, what we saw in 2023 when we predicted the market was going to come down aggressively starting January of 23, the only thing that held it up was the reverse mortgages. If you don't know what that means, it's basically the banks, if your payment, let's say a lot of people were in variable mortgages that had a very high payment at the end because obviously the rate just went skyrocketing. What they were doing is if your payment became almost an interest only payment, and if your interest was over your principal, all they were doing was subtracting your principal in the property that you've already paid down years prior. So it's basically what they did in COVID. They weren't like giving you a grace period not to pay your mortgage. They were just sucking dry your principal payment. This is why now in Canada, our average, and again, this was reported just recently, I think it was August or September, the average mortgage in Canada is 60 to 80 years, which is insane. Average. That's not just a one-off, average. So if it averages 60 to 80, what is the maximum? I mean, we have a client that works for RBC, and she was, working on a file with one of their clients, and their mortgage was like 200 plus years. I think it was like 250 years. It's basically older than Canada and America. So quite scary. How do you fix that? I don't know. But let's take a look at this article here. This is what we're feeling going into it. And I remember, like, this is TD, the Economist here, and they're going to be really, obviously, very gentle with what they're saying with their pricing and stuff like that, and also how the market's going to come down. They're not going to give you the full amount, but I would imagine they're bracing. We know Scotiabank went through liquidity problems. We know TD's had some heavy exposure here in the U.S. Like, the Canadian banks are not as whole as we think they are. This is why when we tied up all that money in Canada, I made sure our GSEs were in $100,000 buy-ins, because what happens is if a bank collapses, and if it's like a 1% chance it collapses, I would imagine that the Canadian government's going to help them out like they do here in America. So they shouldn't lose your money. But why would I trust them? You know what I mean? So I made sure I bought $100,000 buy-ins in different their mortgage GICs rather. So let's say they had 5 available, so I bought one of each, and then you can only buy like let's say 5 at 100K at TD. Then you'd have to move them out to, if it was CIBC or Scotia, whatever it was, you kind of moved your money out just to make sure, because again, they're not as whole as we think they are, to be honest, because we past events thinking that the Canadian banks are so robust and their policies were great. Again, they're holding the most amount of debt that they've ever held in their life, and it's not like in America where banks kind of package mortgages and they sell them off to big hedge funds and big companies like that deal with hold the debt. Canadian banks hold their own debt, so again, it's if they go down, they go down. But let's read this. So, the TD Economist, they spelled this wrong, says it expects Canadian home prices will fall even further than its previous forecast for the third quarter into early 2024. An economist, I don't know why it says economic, an economist in a financial outlook report published Tuesday raised the potential for Canada to experience an even bigger correction in home prices. A TD economist who authored the report said they are now forecasting a 10% drop in home prices, up from the 5% the drop they expected in September. I think it's going to go down further. I think we're going to see something like 15 to 20, I would imagine. We'll see at the end. Remember, they're talking about an average. So Southern Ontario is holding the most amount of debts, similar to Vancouver, but I still think Southern Ontario is holding more just based on the population. So if an average drops 10, we're going to drop double that just based on the housing prices. We've had to magnify that drop to 10%, the report said. There are 2 main culprits underpinning this change. The first is our upgraded bond yield forecast. The second is the larger than anticipated loosening in BC's Ontario housing market. So the bond market is going up. So I just pulled it out here just to kind of give it an idea. So bond yields are a critical factor here. Higher bond yields mean higher borrowing costs, as the yields on bonds often influence interest rates on loans, including mortgages. When bond yields rise, it becomes more expensive for people to borrow money to buy homes. This can reduce demand for housing, leading to lower home prices. So just like a quick synopsis of that. So obviously the bond is high and going higher, which is obviously going to give us less lending power. Second is the larger than anticipated. So I don't even know why they said larger. Like I've been yelling at the top of my lungs about this regarding inventory. People that can't hold properties, they're going to be dumping properties. Also, all the inventory that's hitting the market, all the spec purchases, people buying homes on speculations that can't afford them, that are walking away from two, three, four, $500,000 deposits, all happening. Loosening the BS. So what this means is basically that inventory, there's more inventory in the market than there are buyers. And if you look at it, we just did the absorption rate in Kleinberg, for example. There's almost 7 months of inventory. There's more product available than buyers that are willing to buy, and that's what this article is basically saying here. Authors noted that the rest of Canada experiences different market conditions in Ontario and BC, and other regions have benefited from tighter markets and better affordability when it comes to housing. Ontario sales to new listings ratio fell 39% in October, from 60% in May. That's what I'm saying. Like we're going down into the abyss. Attributing falling ratio to a sudden surge of supply. But this was all, we knew this was going to come, right? The surge in supply. And then watch January of 2024. Remember, there's a lot of people that are just holding on by strings right now. Once that starts hitting the market and you're starting to see the prices just get slashed, you know what I mean? Because remember, we still have some sellers have large portion of cushion in there based on when they purchased and now that they're selling. So they may have like a $500,000, $600,000 spread before they go into a negative deficit, so or a negative equity. So that, I mean, they can drop to 300K, 400K, a lot faster than, let's say, someone that's kind of tied to that, only has maybe $200,000 in equity built into a product. So that's what's going to happen now. You're going to see people that have larger cushions that just want to get out, want to get rid of the debt. They're going to slash prices like crazy. And to be honest, I was one of those in the property there that I just sold up north. It's just there's equity. I'm happy getting squaring out. I'm going to claim a capital loss with the CRA, and then we're going to move that money whole into a different market. And again, we won't move it back into Canada based on the current policies and the way capitalism is shaping up until we have some sort of change in government, if it's the same party or another party, but also to have like friendlier terms for people that are more entrepreneurial, and not even entrepreneurial, just people that want to work, save money, and have a better life for their kids. I think it's just the light in the tunnel is it's getting into a point right now, and it doesn't make sense anymore. This is why we're kind of moving everything out to the States, and then hopefully this market stays up or where it is, like here in Florida, and then ultimately, even if it does change in the next 5 to 10 years, you have 5 or 10 years of further oxygen, further opportunity to kind of grow what we have. And then if this changes similar to what it is in Ontario, cash out, move again, no hard feelings, and then keep going, right? We're not going to let government policy steal what we've earned, basically. That's pretty much it, guys. Have an amazing day. If you have any questions, if you are looking to get the market, like I'm saying, look at our past history. We've kind of timed everything perfectly. Listen to what I'm saying. Get on the market. Give us a call. If you want to have like a second opinion, you have a realtor, but you want to have like more of a high-level financial call, give us a call. We'll definitely have a conversation with you, lay it out on the table. If it works for you, then great. If it doesn't, then we shake hands and we walk our separate ways. But that's pretty much it. Have a great day.